So I want to cover a couple of things. The first is the funding hour policy and loan officer classifications of how we operate and how we can introduce ourselves to these people who's asking for loan options. So number one, the funding call hour policy needs to be implemented because we have about 11 submissions yesterday and today, and it will only increase because of the I guess refinance boom that's around the corner. Feels like a lot of EPOs has been passed from previous purchases. I see a lot of bank loans doing down payment system programs and grant programs with 6.8 to 7.5% is turning over to regular conventional loans to us. So I want to emphasize within the 8 a.m. to 1 p.m. Pacific, we want to honor the quiet time or quiet period for the processing team so that we can primarily focus on the funding files and issuing PTF conditions. It is recommended not to call the processing team directly, especially with the prior to doc conditions. As we use the ERP system, everything that we can think of is already documented in an Excel form and in writings with checklist. So please review that ERP page before you call so that you find out where the file is at. An exception for this is when there is a critical emergency, such as incorrect document accidentally being submitted, pay stubs, bank statements, and etc., can be dealt in a time-sensitive manner. And second, Giving Tree is operating in two different major channels, one with broker, another with non-delegated correspondent. So to specify what these mean, I want to just give you breakdowns in checklist. The broker MLO deals with the third-party processing teams. The mortgage broker doesn't hire the loan processor. They delegate the loan processing to a third-party company. And again, this is a traditional mortgage broker setup. So this model, loan officer acts as a traditional broker, placing loan to the wholesale lenders. There's a compensation cap and type with a borrower paid or lender paid at the time of submission. And comp plans per the mortgage broker company to mortgage lender, there is from 100 basis point to 275 basis point. And this can only change once per quarter. So we cannot apply individual micro level applications for each file. When you sign up with 100 basis point with one specific lender for that quarter, entire loan volume must be sold with 100%, 100 basis point baked in to the pricing. So we have about 42 different mortgage lenders that capped with 200 to 275 basis point in case you submit the loan as a lender paid. So you don't have to worry about XYZ in the worst case scenario. And when you submit the loan as a lender paid comp, because we already disclosed a higher rate baked in 275 basis point, you can convert back into borrower paid comp. But when you submit as a borrower paid comp in day one, you cannot go back to lender paid comp because it defeats the purpose of the fair lending rules. So loan pricing is subject to specific wholesale lenders and specific caps that they have for us. Non-delegated correspondent, some bankers may call it as a retail channel because we can originate with origination fee and rebate. So in this model, loan is closed in the company name using the line of credit that we have. It is not delegated because we don't underwrite the file in-house. The end investor performs the underwriting. The revenue structure works in this way, where the company receives the rebate and called the yield spread premium, and we give it back to loan officer, along with the origination fee that you charge on Section A. Loan pricing is typically controlled. There is a 0.25% margin built in from the broker rate. So if you say, I must provide the best rate possible to the individuals, don't look into non-del, look into wholesale. But if you say, I want to make some money out of it, I'm not going to make $300, $500, but I want to make handful, thousands of dollars from one file, then look into non-delegated channels. Operation flow is very similar to retails, where you can disclose the origination fee, but you don't have to disclose the rebate portion on the closing disclosures. So on the loan sifter, if you run a typical 80% loan to value conforming loan, you'll be able to see wholesale channels always win because there is no margin built in. However, In this case, non-delegated channel is only 1.146% apart. So in my understanding, with this loan, should I disclose this rebate as a lender credit and charge the borrower? Or should I not and keep this as a rebate, undisclosed commission that I can contain? It depends on the file, clientele, and specific details of the loan. So for example, Mutual of Omaha is very good at DULP cookie cutter deals. But anything that's outside the box, you need to go with Mega, AM West, or one of these guys. And surprisingly, these wholesale guys sometimes have a worse pricing than the non-delegated correspondent. So you don't have to always think that wholesale wins over the other. When you go to the broker summit in Irvine or Pasadena later this year, you'll also hear brokers are better. Brokers always win. But that does not equate to what Giving Tree offers. So for example, Westcap is very intact with Rocket Mortgage. So they don't sell United Wholesale Mortgage product or any other lender product. So if they offer 100% commission over XYZ, if you see, where is Rocket? It's not even on top 5. Even though you get 100% over one specific wholesale investor, they cannot, and the individuals who work for the company cannot beat the system that we have, because that's what I intentionally have made. So we cannot fundamentally, systematically lose. It doesn't equate that way. So I want to relay this to the topic that I prepared today as well. As a loan officer, how do we operate like one of these 1% or the top 0.01% loan officer? On the Scotsman's Guide, I think later next month, we'll have the top 250 loan officers for the nationwide. And one of the podcasts from Real Broker owner, Sharon, had a talk about the specific details of how he was able to operate the the real estate company. And they also started a mortgage company last year and another company called acquisition.com with Alex Homozy. So I just toned it down with the takeaways that I had that I want to share it with you all. There's 7 principles that he mentioned. And he mentions that success leaves clues. And he wants all of the audiences to decode what the DNA success is. So Giving Tree, we are going to learn about the 7 unspoken principles used for elite performers like Elon Musk and the founders to win at the highest level. So principle number 1 is unreasonable effect. In a rigged system, talent alone is not enough to get noticed. So the lever is only thing you can truly control is how much you work to put out. To break the odds, you must use an unreasonable effort. This means doing something so many times that the rest of the world thinks that you are crazy. Principle 2, invert the rules. So the concept here is that the standard path leaves you stuck. You need to change your approach. You need to change the algorithm. So for you to change the framework or algorithm, you have to use this assumption auditing. You have to start questioning how you used to think and how you used to follow the guidelines. So I recommend you to identify the unspoken assumptions that you had and break one of them one by one. Make a list, check one by one, and see and ask yourself, what if I did this in this reverse? And principle number 3, the decision matrix, comes with the not all the decisions are equal. You must categorize them to move fast. Some are important, some are not. Some are time sensitive, some are not. We have to categorize what to do first. And then you have to decide which one fits the best. Type 2, the reversible, is the one that you have to go back on an action and you have to make a decision really fast. On the other hand, the irreversible ones that you cannot go back, you have to plan carefully. If you are spending money for marketing purposes, if you are hiring an individual a processor or assistant, you have to think through. You have to reason yourself the reasons why you must make this decision. And I don't want, you guys to overthink things that you can fix later. Elon Musk says Stanford will always be there. The startup companies won't. Principle number 4, the yes hinge. So we seldomly or occasionally come up with this. The mindset either shrinks or expands your opportunities. It's a DNA that you have to change as a self-employed individuals. The average mindset always asks, can I do this? Which leads to skepticism and doubt. But the 0.01% mindset is asking, how can I do this? Which forces you and your brain to find solutions. So the answer is always yes. Once you say yes, your only job is to figure out how. Principle 5, the magic cocktail. They say to perform at your best knowledge and your level and your emotions, you need a specific mix of feelings. This mix comes that you must feel superiority, that you deserve to be there, you deserve to be mentioned and be welcomed, and this insecurity where you are the beginner and you are terrified at the same time. The tension that you create supercharges your work ethic. You're not going to be egotistic, you're not going to be rude and fall into mannerism. But if you don't feel both, you are in the wrong room. You have to feel both at the same time. Principle 6, the right seat. They say the concept comes with this idea of you cannot overwork a bad business model. However, they challenge you saying an advisor, the better ones, have skills but with limited pay, while the entrepreneurs takes risk for a massive payout. So we are not selling hours into wages. We are selling skills over our performances. So don't stay in a seat just because you are good at sitting in it. Make sure you are in a vehicle that can actually make you wealthy. How can this be? I welcome you to make a checklist of where to begin, where to make the most money. It could be cold calling, it could be cold emails, it could be YouTube videos, Instagram threads, the shorts, reels, whatever it may come. Our job is to find what fits in the box. Principle 7, the extreme preparation comes in this way. The public only sees a very small part of the effort. They only see the meetings or the lunch, the programs, or these opportunities. However, it's like, iceberg. Only the world-class performance is built on the years of deep research and the understandings. And this immersion that no one sees comes from, the understanding of underwriting guidelines, the workflows, standard procedures, which comes into play of how to submit the files as clean as possible, how to price out the loans that's competitive so that our clients don't shop around, how to minimize the prior to that conditions after the loan is submitted so we can ensure and guarantee loan closing within 10 to 15 days. Average people practice during this game. The 0.01% treat every meeting like it's a Super Bowl. Preparation is respect. Can you do it? We have Gamma, we have Gemini, we have Google Notebook LM. We have 3 large language model systems that we can operate, that company provides, so you can win every single time. So what's the takeaway? I don't want our loan officers just to learn. I want all of us and start acting. Which one of these 7 rules can you pick today and install it in your life today? Because my realtors, my clients are not waiting for us. We have to approach to them. We have to get to them. So this week and next week is going to be very difficult. It's because Dream for All voucher channels are opening up in less than 3 weeks. So I want to question ourselves. How many realtors did you call and let them know the stream for all vouchers, the portals are opening up. And how many qualifications have you done? How many pre-quals have you done? And third, what did you do to help your business partners to win? Your realtors, your clients. If you don't give them the reasons why they have to work with you, they're not going to call you. They're not going to find you. But you have to read over this dense of understanding and knowledge. So when anyone pokes you, you need to come up with the knowledge, the mortgage product, the details. And that's the beginning, because that's what the professionals do. We don't expect to show up at doctor's office and ask for the doctors to run GPT with us, Gemini with us. We expect them to give us a solution within 30 seconds to a minute by telling us how we feel. And we pay for the service. So we have to be in the same position too. We are licensed loan officers. We're providing finance options and solutions. We give them timeline. We walk them through the home ownership journey. And why can we not be in a position to get paid for the services we provide? We need to. We have to start thinking that we can do that as well. So team, do you guys have any takeaways or questions about the stuff that I covered today?